Welcome to Deep Dive. Today, we're digging into a financial services company, Remitly Global. That's REELY on the NASDAQ. We're looking at a recent analysis that calls it an undercovered financial services gem. The piece is titled Remitly Global, a dirt cheap growth stock. So our mission today, we want to unpack the arguments in this article. It makes a pretty strong case, actually. Calls Remitly the ultimate growth stock to buy with $1,000 right now. Even a slam dunk buy. Strong words. We'll explore the problem Remitly is trying to solve, globally, look at its growth, and figure out why, despite maybe some market jitters, this analysis is so bullish. We'll sift through the claims, the financials, the risks, help you get to the core insights. Okay, let's get into it. Let's start with the basic problem Remitly tackles. For anyone listening who sends money internationally or knows someone who does, what's the big challenge usually, and how's Remitly different?
Well, the core issue, fundamentally, it's always been the high fees. Sending money across borders can be expensive. Traditional banks, they often hit you with flat fees, and those really eat into smaller transfers, Then you've got players like Western Union. Very common, but their fees, often a percentage, can be exorbitant. It's just an everyday cost, a real pain point for millions of people worldwide. And what's interesting, or what Remitly does, is tackle this head-on using digital tech. They leverage smartphones, basically, to offer much cheaper rates. Their app is designed to be easy to use, and it's really disrupting that old model. Significantly lower fees for the user. So it's making a vital service more affordable, more accessible.
Yeah, you really do cringe thinking about those old fees. It's like paying a penalty just to send your own money. So Remitly's digital approach, it clearly addresses a big need. But what about trust? That's huge in finance, right? Especially moving from familiar brick-and-mortar places. How did they build that, and where did they start?
That's a really key point, trust. So initially, Remitly, they provided a really comprehensive service for sending money from the U.S., specifically to key markets like India and Mexico, big corridors. By really controlling both ends of the transaction and building that digital experience, they gained a market share pretty quickly, built that trust, and now they're expanding that app globally. Because the core value proposition, cheaper fees, reliable service that appeals everywhere, right? Everyone wants that.
Makes sense. Focus, build trust, then expand. Now, the analysis calls Remitly a growth stock, makes bold claims. Let's get into the numbers behind that. What kind of growth are we actually seeing?
Okay, the numbers are pretty striking. Last quarter, revenue grew 34% year over year, hit $362 million.
34%, okay.
Yeah, and that was driven by send volume jumping 41% compared to the year before. So lots more people using it, sending more money, and crucially, Remitly is profitable now. Last period, they reported positive net income, $11.4 million.
Profitability is key for growth stories.
Absolutely, and a lot of the future growth, the analysis points out, is expected from corridors outside North America. That segment grew almost 100% year over year, hit $322 million in revenue over the last 12 months.
Wow, nearly 100%. That's massive international growth.
It really is. Shows the global expansion is working.
Okay, the article also mentions fantastic unit economics and this big market potential. For someone trying to grasp the long view, what does that actually mean for Remitly's future?
Right, let's connect the dots. Remitly's market cap currently is around $4 billion. Trailing annual revenue, about $1.36 billion.
Right.
The analysis projects that revenue could climb to $2 billion, maybe even $3 billion, within the next, say, 5 years.
Okay.
Which suggests there's still a huge chunk of the global remittance market left for them to capture. And the fantastic unit economics, that refers to their gross margins. They're sitting at nearly 58%, let's call it roughly 60%.
60% gross margin, that's healthy.
Very healthy. And the argument is, as they scale, that could translate to net income margins of 20% or even higher. Now think about that. On $3 million in revenue, a 20% margin. That's $600 million in earnings. Compare that $600 million potential future earnings to the current $4 billion market cap. It implies a forward price-to-earnings ratio, a PE, of just over 6, maybe closer to 5, depending on the exact numbers you use.
Right, 5 or 6 times future earnings.
Exactly, which for a company growing at over 30%, well, that's why the source uses the term dirt cheap. Investors potentially paying very little for that future growth.
Okay, that paints a very compelling picture based on the source's projections. So if the numbers look that good, and the potential is there, why is the stock down? It's off, 30% from its recent highs? The analysis we're looking at points to a couple of reasons, right? Things weighing on the price.
Yeah, that's the million-dollar question, or maybe the $4 billion question here. Why the dip? The article highlights two main risks, or maybe narratives, that are likely contributing. First, there's this whole discussion around potential disruption from stablecoins.
Crypto.
Right. Stablecoins are gaining traction. You hear more about them, especially with things like the Circle IPO talk, new legislation potentially coming in the US. But the analysis argues, well, okay, stablecoins might disrupt traditional fiat money transfers, but you still need a platform, an interface to actually send those stablecoins easily, especially across borders. And it's not like they're truly zero fee, as some crypto folks might suggest. There are still costs. Plus, importantly, Remitly could pivot, right? They could potentially become a platform for stablecoin transfers if that becomes the dominant way people send money.
So the source sees it as adaptable, not necessarily an existential threat.
That seems to be the view presented, yes. More of an evolution they could adapt to.
Okay, and the second risk mentioned,
Yeah.
what else is potentially spooking the market?
The other thing hanging over the stock is a potential remittance tax. It's part of some proposed legislation in the U.S. The source calls it the One Big Beautiful Bill. Bit of a loaded name maybe, but that's what the source says.
Okay.
And it includes a proposed tax, about 3.5% on outbound remittances, money sent out of the U.S.
3.5%.
Yeah.
So the worry is that discourages people from using Remitly.
Theoretically, yes, it could make sending money slightly more expensive, potentially disincentivizing users. But again, the article's perspective is, look, people send money home to family. It's often essential, driven by need, by connection. Is a 3.5% tax really going to stop that fundamental flow? The analysis suggests probably not. It's a relatively small rate for such a core need.
So the source sounds pretty confident these aren't fatal flaws, calls them excuses to exit even, and argues these concerns are precisely why someone should be buying now, leaning in. But stepping back from just this one analysis, how are these risks generally viewed in the market? Are stablecoins or taxes seen as genuine headwinds by other investors, even if this source downplays them?
That's a fair point. While this analysis is clearly bullish, dismissing these risks, the market often does price in uncertainty. I mean, the stablecoin narrative, it represents a real technological shift. We don't know exactly how it will play out.
Right, it's still evolving.
Exactly. And any new tax, even a small one, introduces friction. It complicates things. So for some investors, these aren't just flimsy excuses. They're legitimate uncertainties, potential headwinds, especially in the near term. They might warrant caution. This particular source, though, is clearly making a bet on Remitly's resilience, its ability to adapt, and the fundamental enduring need for affordable ways to send money home.
Okay, so wrapping this up, what does it all mean for you, the listener? We've unpacked this analysis, looked at how Remitly is using digital tech to shake up an old market. We've seen the impressive growth numbers, the fantastic unit economics argument from the source, and we've also dug into those concerns, stablecoins, potential taxes, and why this specific analysis thinks they might be, well, overblown, while also acknowledging, yeah, other investors might see real risk there.
Yeah, the core argument from this deep dive based on the source material is that Remitly is growing fast, solving a real problem for millions. It's got a strong financial path laid out, according to this analysis, and the valuation. The source is adamant, dirt cheap for long-term investors, with a lot of market share still up for grabs globally.
The story presented by our source is definitely compelling, paints Remitly as this undervalued disruptor. But maybe the bigger picture here, beyond just Remitly stock, is how companies like this are changing essential financial services. It shows even really established industries are being transformed by digital approaches. It's not just about saving a few bucks on fees. It's about, shifting power to consumers, creating new financial connections in our globalized world. So thinking about all that, here's a final thought for you to chew on. Given this ongoing digital finance revolution and how interconnected the world is, how else might international money transfers evolve? What role will technology versus regulation play in the coming years? And maybe, what other hidden financial pain points out there are just waiting for similar digital disruption? Something to ponder.